Hi, have you been thinking about taking out a reverse mortgage but have been told by the critics they're just too expensive? Well, there are a lot of people out there that are not familiar with reverse mortgages, that are only looking at one particular aspect of it. And that's just not the way you should be looking at it. Hi, my name is Richard Woodward. I'm a reverse mortgage specialist and an expert in the field. I've been doing this for quite a long time, and I'm a director of specialty lending for our company. So I do a lot of research on reverse mortgages, and I ran across this article written by Dr. Wade Pfau. He is a has a PhD in finance and teaches at a university. And he wrote this article, and I wanted to share some of his thoughts with you. Now, I'm going to put a link below to the actual article. I would like for you to read that as well, but it's a little complicated. So we've got just a short period of time to talk about it, so I'm going to hit the high points. So one of the things that you can do with a reverse mortgage is if you're going into retirement with an existing mortgage payment, you need to extinguish that right away if you can with a reverse mortgage. And what that'll do for you is enable you to stop making monthly payments on your on your forward mortgage, and then you could take that money and utilize that in different ways. You could do that by contributing large amounts into a catch-up IRA. You could defer taking lump distributions from your portfolio, which could be earning money in the marketplace as opposed to taking distributions where you would be losing value. Or you can defer taking your Social Security until you can get the maximum amount at age 70. So there's several different strategies that you could do there. But in this particular article, we're going to compare an individual that has $1 million in an IRA, who is 65 and has a home that's worth $200,000. Now we're going to set this back to 1975, so thus the $200,000 value. Not going to find many homes today at $200,000. But if you go back and we run the scenario utilizing given a set of numbers, the doctor was able to determine a scenario where they didn't use a reverse mortgage and one where they did. In the one where they did not use the reverse mortgage, remember, we go back through time, and there were some times when they were 15% in the stock market drop, 27%. So that portfolio declined rapidly in value just because of losses in the market. Now, in the opposing scenario where we took out a reverse mortgage, in those times, we tap into our reverse mortgage, which is tax-free income, because you're actually not taking income, you're borrowing from your own equity. We take that tax-free and supplement replace our withdrawals from our portfolio. Now, that enables your portfolio not to lose money and able to regain and rebound much more quickly than if you had withdrawn those funds. So in those scenarios, we run them side by side and we look at a 30-year period. In 30 years, the scenario where they didn't use the reverse mortgage, the client ran out of funds. In the scenario where they did use the reverse mortgage, they ended up with an asset base of almost $1 million and $183,000 more than when they did not use the reverse mortgage. So even though there is cost associated with reverse mortgages, utilizing it the proper way to prolong your wealth in retirement will really save you a lot of money. So if you have any questions whatsoever about reverse mortgages, how they work, or if you'd like a free consultation and an analysis sent to you, I'll be happy to do that for you. Just give me a call at 214-945-1066. Again, 214-945-1066. We'll look at your situation and determine if a reverse mortgage is the right loan for you. Thanks so much, and I look forward to talking to you soon.